What's going on, family? Welcome back to the channel. Today we're talking about, does the BRRRR strategy really work? And it's one of my best strategies that I love to do because it allows you to build wealth in a short amount of time. But the trick is when it comes down to the third R, where it kind of separates the flippers from the buy and hold guys. It's that third R. And we're going to talk about that third R and the rent and the rest of the BRRRR strategy. So let's go. Me, Johnny Lynum, been investing for over 15 years now, and just done it all between done a little bit of wholesaling, with deals that we don't like to buy. We primarily fix and flip and execute the BRRRR strategy to keep and add single family houses to our rental portfolio. We buy apartment buildings as well too. We run our investment company virtually, which is a little bit unique, and we do deals across the Southeast in different cities where we don't live at. Some of them we lived in before, and it's worked out really, really well. I wrote a book last year, Millionaire Real Estate Success Strategies. Check out the link in the comments to get your free copy that you can download a copy of the PDF of the book. And I'm all about real estate, but this is one of my favorite strategies with the BRRRR strategy. So let's go and let's jump into it. So the BRRRR strategy allows you to keep real estate with little to no money in the deal. And we start talking about cash on cash returns and the type of investments that you're doing. The BRRRR strategies is one of the strategies that allow you to get an infinite return. What do I mean when I say an infinite return? An infinite return is you're getting cash return each month and you didn't invest any money in the deal. That's what an infinite return is. And so that's what we're going to start off. But the BRRRR strategy, let me go ahead and define it. So the B is for buy. The first R is for renovate or rehab. The second R is for rent. You're going to rent it out after you renovate it. And then after you rent it out, that third R, you're going to refinance it. And after you refinance it, you're going to repeat and do it all over again. So let's go. Let's get into the buy. The buy part, no secret. You got to find a deal. You got to find a really good deal where it's that when you go in, you underwrite the deal, and after you put all the work in it to renovate it and make it rent ready, that you have enough money left in the deal, whereas that you can pull all your money out. You have enough equity left in the deal where you can pull all your money out. So that's why we underwrite most of our deals to between 70 and 75% of the after repair value. So if the house is worth $100,000, and that means I can go get a loan when I refinance for $75,000. So if I buy for 40, I put in 30, and the bank gives me 75,000, I pull all my money out. I got $5,000 put in my pocket, and I'll probably pay a couple thousand because my closing costs of the credit union aren't that much. That pull all my money out and get some money back in my pocket. And now, if I'm making $500 a month passive cash flow after I pay my property management company, that's $500. That's an infinite return because I pulled all my capital out. And that's one of the big strategies that you can use with the BRRRR. So buy, renovate, you're gonna rent it out, you're gonna refinance it, and then you're gonna repeat. And so that's the BRRRR strategy. With the renovation, the rehab, you got to fix it up. You got to make the house livable. That's where the opportunity to buy an asset that's distressed, that it needs work and needs renovation before somebody can come live in it and pay market rent. And so that's with the renovation side. You work with a property management company to rent it out, or you can rent it yourself. If you want to be a hands-on landlord, it's all up to you. We managed a handful of our properties so my wife could get a real estate professional designation from the IRS, whereas that now any passive losses that we have in our portfolio, we can bring that over to my active income that I have with the Air Force, with being able to wipe out taxes on that. And it works really well. So that's something you can talk to your CPA. I'm not a CPA. Talk to your CPA about different strategies on how you can leverage real estate to save on taxes. Rent. But at the bottom line, you want a property management company. If you're going to do it, you need to do credit checks. You need to, and I'll tell you what we do. We look for 600 credit score, no evictions, and no charge offs when it comes to utilities. And they make at least 3 times the monthly rent. They meet that criteria, then, we're good to go. And it's not an issue. The refinance, you got to find a bank. You got to find a bank, a lender. There's a lot of lenders out here. Some of them have higher rates, especially now, but a lot of the non-traditional banks have a lot higher rates right now, but you can get it refinanced and get it done. So it's going to hit you a little bit on your cash flow. But that's why you got to get good deals at the right price so you can price that in with the higher interest rate to know, hey, when I rent this out, this is going to be my mortgage, insurance, and taxes that I'm going to have to pay each month for this property. What does that look like? And the property management, is it still a deal? Am I getting at least 8-10% cash on cash return on my money? Or if I'm pulling all my money out and I'm getting an infinite cash return, then it's all good. But you want to look at that, the terms that your bank is giving you. You want to go and meet with your banker at least once a quarter, depending on your deal volume, whereas that you understand it. We just refinanced a townhouse that we're doing a BRRRR strategy on, and we're looking at 5.5% on our interest rate. That it's a 5/5 arm. It resets every 5 years and locked in for 15-year term, 30-year amortization. And it's in the LLC. It's not on my personal credit report. Boom, 5.5% for we just refinanced our apartment building, and we got 4% locked in for that, which was super. That was a super deal with getting a 4% rate on our apartment deal. And then you repeat. You just do it over again. And you get back into it, you find another deal, and this is how you build wealth. You do 4 big BRRRR deals a year where you make $250. We're gonna be conservative, $250 a month cash flow. You're gonna make more than that with where rents are today. But $250 on 4 BRRRR deals that you can pull the money out, no money in them. Now you're bringing in an extra $1,000 of passive income a year off the BRRRR strategy. Passive, and we're not even going to talk about the payment, mortgage payment paid down by your tenants, paying down your mortgage each month, paying down that balance. The tax advantages that you get with owning real estate with the depreciation, the cash flow, obviously, and then long-term appreciation over time. That you do that 5 years, buying 4 houses each year, you're going to build up to now you got $5,000 a month coming in passively, and you got no money left in the deal. You can't beat that. And that's the power of the BRRRR strategy to go. But there's always pros and cons. So let's talk about some of the pros and cons. So in real estate, we all know this, but you make money in real estate when you buy, not when you sell. If you don't buy at the right price, then it's going to take you a long time to correct, whereas that you can actually be profitable in the deal if you're going to sell in the near term. So you got to make money and underwrite by buying the deal at the right price up front. The second one, cash flow is king. Especially in this market, you're buying for cash flow because as the market, corrects, you might lose 10, 15, 20% of your value of your property. But if you're cashing out at 75%, you got 25% equity from day one. And if you don't sell, then it's not a problem. You're not going to have to worry about that. And people right now, the millennials are more inclined to rent. They're turning to more and more renter nation as interest rates go up. More people can't buy single family homes. So if you're creative, you know how to put deals together. There's going to be plenty of people, if you're in the right market, that's going to be wanting to rent your property for a long time. So that's the one of the definite pros with cash flow. You got to buy for cash flow. And the third one, building wealth. I just talked about it. 5 years, you're doing 4 deals like this a year. Next thing you know, you got $5,000 a month coming passively. You do this for a whole decade, 4 properties a month, of a year like that. Now you got 10,000. That was conservative at $250 a deal. Some could be more, some could be a little less, but you're gonna be well off with building wealth and building a portfolio up over time by leveraging this BRRRR strategy. But some of the cons, if you're not good on your numbers, you make some bad assumptions. You don't do your underwriting right. You don't have the right knowledge, and you underbid your contract work because you try to do it yourself, and you didn't get a professional to come in and do it. You could lose money. You could underestimate your rehab costs. That's one way. Higher interest rates, you got to factor that in when you buy and start a project that rates are going to go up. If you're buying today and you know you're going to refinance in 6 months, what is it going to look like if interest rates are 1% higher or 1.5% higher right now than where they are today? You know, do that stress test, that analysis to see when you're refinancing that you're going to be in a higher rate. How is the deal going to, is it still a deal? Because you may need to buy it for a little bit cheaper. And then also you want to make sure that with that you have your credit score intact, whereas that now you can qualify for the best interest rates. And the cons, this takes time. You're in it for the long game. It takes patience to build wealth. Wealth is not a sprint. It's a marathon. It takes patience to build real wealth, to buy properties and just go in, do the work, refinance it out. pull all your money out, do another deal. 250, 300 a month doesn't sound like a lot to some people, but when you start doing it over and over and over again, and we start talking about the benefits, the appreciation, the debt pay down from the residents paying their mortgage, the tax write-offs, and the depreciation that comes with it. And over time, the appreciation as the asset goes up in value, because guess what? Inflation is always here. The Fed said they want to keep inflation at 2%. So that means 2% over 10 years, the dollar's going to be worth 20% less in 10 years. So you got to buy an asset that's going to let you hedge against inflation. Right now it's at over 8% inflation. So that's why so many people diving into putting money. You look at Wall Street hedge funds and a lot of these big buyers that buy real estate because it's a hedge against inflation. So that's where you want to be with, but it takes patience, it takes time. And I have another video you guys can check out. I think we're gonna drop the link below on just different real estate investing strategies that you can use to build wealth. And like I always tell you guys, definitely get a free copy of my book, Millionaire Real Estate Success Strategies, what they forgot to teach you in school, to kind of help you get going on your real estate journey. And then drop in the share in the comments below, if you've used the BRRRR strategy before, and just some of the benefits that you found, or some of the setbacks, or maybe some more cons that you ran into, and share that down in the comments below, and let me know any other content that you guys want me to shoot. And I'll see you on the next video.